Very good. Well, thank you very much for coming to our monthly sales meeting. It's our sales meeting for the month of February. And we have a lot of good stuff that we want to share with you guys this month. My name is Alan Richardson. I'm the managing broker here. And seriously, if you ever need me, please reach out, call, text, smoke signals. I'm here to kind of help you grow your business, because if you don't grow your business, we don't grow ours. So that's how we work together. So I want to jump right into some of the data and some interesting things that we have going on. So the first thing I want to, well, let me try and click on the right screen. We'll see if that works. All right. First, I want you to look at the comparison between 1995 and last year. So we sold about the same number of homes last year as we did in 1995. And partly you may say, that's a little bit depressing, right? Because, you know, we've got another, 60 or so million people now, 70 million people more. However, we did it with about half the inventory. Back then, there was almost 5 months of supply. Now there's 3 months of supply. You know, granted, the annual income was a lot less. That has increased by about 100% now. But like, here's the big kicker, right? Is that even though when you look at 1995 to last year, the U.S. population in that same time frame has grown by 26%. However, our inventory of homes have shrunk by 45%. And the median price is also up. Incomes are up. The whole idea here, and what I want you to really understand, is we are set up and we are poised for a bounce back. We are poised to have a very, very productive year. There's a lot of pent-up housing demand, and we're going to look at the reasons why I see this coming down the road. So what we're looking at right now, so the top graph is from Georgia MLS, the bottom is from FMLS. I pull the data from each month, and you can see that pending sales are still trending down. However, this number, like we were down 18%, 17%. This number has been moving much closer into positive range. The good news is actually closed sales is up last month for the first time in over a year. We have closed sales that is now trending up. And so that's a really good thing for us to be seeing in there. So I'm very, very pleased with that. However, please don't forget what's taken us, the effort that it's taken us to get here, right? We have, like over the last year, our market shifted a lot. You had to work really, really hard. Don't forget that. Like you've earned your stripes. You've put in the work. And so we've had to work very, very diligently to get to where we are right now. We're in a really good place. Don't get down on yourself, because there's a lot of really great things going on. But a lot of it is mindset based, right? So we all have storms. We all have storms that hit our world, right? And so I want to talk to you a little bit about those storms when the storms do come, and because the storms are always going to come. So Ming and I were blessed a couple of years ago. We got the chance to go out to, we got a chance to drive across the United States. It was a really, really cool trip. And one of the places where we went was Colorado. And Colorado is one of those very unique places where you got the Rocky Mountains in one place, and then you got these open plains. And at the same time, it's the only place in the United States that both have buffalo and cows. I know that sounds like a strange thing to kind of throw at you right here. But what you have to look at is those storms come rolling off out of the Rockies, right? And it rolls out onto the plains. And then you've got two different animals out there, and they look at that situation completely different. And what I want you to look at is how do we handle storms that come in our life? So like let's look at this. So if you look at the cows, those storms come across, and the cows try and run away from the storms. Now, newsflash, cows aren't real fast, right? So the cows start trucking along, and that storm slowly creeps up behind them, and then it completely encompasses them. And then they keep going the same way the whole time. And that storm just rolls right over them the whole time. And they start walking with the storm, and they start cruising with the storm. And they spend a long time in that storm because they're slowly trying to walk their way out of it while the storm completely engulfs them the whole time. Now, in contrast, what does the buffalo do? The buffalo sees the same storm brewing. And when the storm comes in, the buffalo turn and charge into the storm, right? They run at the storm. And because they run at and through the storm, their time, the amount of time that they're in that storm is minimal. Like when you're walking through that storm and it's engulfing you like the cows, it takes a long time to get out of that storm. But when you charge into the storm and get through it and go through to the other side, the pain's less, the time is less, and so that's the thing I want you to see is that this is the same storm, right? The cows are enduring it for a much longer period of time because they're walking with the storm. The buffalo, they charge right through it to get through to the other side. And so it becomes a mental thing of, are we going to attack the storm and get through it? Or are we going to let it just kind of run us over? Because that's what I see a lot of times is I'm not trying to call anybody cows, but like we sometimes we behave like cows. And I understand no one likes storms, no one likes challenges. But the bottom line is they're going to come, right? We always have storms, whether it's personal or professional, family, the whole 9 yards. You do not get to choose whether or not you're going to have a storm. I can promise you, every single one of us has storms of some form or fashion. The choice that we have to make is how do we respond to the storms? And more specifically, when do we respond to the storms? When we see that storm coming, are we going to turn and like slowly try and walk away from it, knowing that it's coming? Or are we going to turn and face it head on and get through that storm quickly so that we can get to the other side? And that's really what I want to encourage you with, is that it's about you're like how you attack that storm is really going to dictate how you come through the other side. I want you to be the buffalo, right? Charge the storm and get through it. Even though I see a lot of really positives in our market, there's always storms in our life. I feel super optimistic about everything happening in the real estate market right now. No matter what, you're still going to have storms, right? Your business is going to change. Things will shift. These kind of things will impact us. And so please take that to heart as we move forward, right? So we have three other things that's really impacting our market right now. I kind of want to touch on those. And these are three key terms that we're seeing happen. We're seeing a big mental shift in what's called switching costs. And switching costs, this is happening heavily with our sellers right now. And this is the economic and psychological effect of when people switch from one alternative to another. And so in the housing space, what's that switch really going to be? Well, we're switching from, am I going to switch from a 3% rate to a 6% rate? Am I going to switch from a 4 to a 7? There's a lot that kind of goes into that. The other thing we're having going on right now is seller impatience. Now we've had folks who are just going to wait out the market, wait things out as they're going along. But now folks are coming to the realization of, guess what? It is what it is. We're not going back to 3% rates. We're probably not going back to 4% rates. We might be in the 5s, but it's gonna it's not going to happen right away. And the other thing going on that we have is lifestyle changes. Things are still happening in the world of real estate that really is impacting everything we see going on. And so those things are super important to our market, much more so than just interest rates, just prices increasing, that kind of thing. So this is from Fannie Mae, and Fannie Mae says that we anticipate that after the past several years of extreme volatility in the interest rates, that the interest rate mortgage will continue to moderate down through 2024 and get below 6% by the end of the year. That's a really strong place for us to be. And it's never gonna go straight down, right? We're gonna do this kind of wobble thing a little bit and work our way down. But we really are seeing all the signs where interest rates are heading in the right direction. And so you can see that even since December, the difference in the projections on what's happening with interest rates. And you can see that, all the major indices were we're looking at 7%. They knocked, basically they've knocked everything down half to a point of what they're really looking at moving forward. And when you look at this, the Fed is expecting to have three rate cuts over the next year. And not that the Fed rate cuts do a lot to actually move the 30-year mortgage rate. What they do is they impact the 10-year treasury. And then the 10-year treasury is what moves with the 30-year mortgage rate on here. So the good news is with mortgage rates dropping, what happens when mortgage rates drop? Demand goes up. And that's the exact same thing. CoreLogic, who is they're kind of the data people behind all the MLSs that we use out there. And so this is her prediction. Most markets will continue to reach new home price highs over the course of 2024. We are not looking at prices reducing. We're not looking at prices softening. And so the other thing that's really going on very positively right now is Atlanta's economy overall, and this encompasses all the majority of the Atlanta metro area. This isn't just downtown area kind of thing. And so overall, the Atlanta area is growing faster than the rest of the United States. We're in a very good place economically from that point of view. In addition, we have very positive population growth. We have both domestic as well as international migration coming in. We are the fourth largest, fastest growing population centers in the United States. So, and out of all the places in the US, it's a pretty solid place to be. We're growing, and our economy continues to be really, really strong for us. Now, one thing that we are seeing though is, and I feel it every day, we're getting older. Right, so we aren't making quite as many babies, and we do have an aging population now. It's not predicted to be ridiculous, but we will have some more folks that some more of our silver surfers later on in life. But most of them are going to be staying pretty steady. And that if you look at 2020 versus the predictions on 2050, we are looking at really solid long-term growth, but also a population that starts to get a little bit older. And why does that impact us? Well, there's a recent study that said 60% of adults 65 and over expect to stay in their homes. And so we have a lot of folks, a lot of our boomers are, own their homes outright, that kind of stuff. And so 60% said that they're going to stay. They think that they're going to stay. Now, in direct contrast to that, we also had that same study said, would you consider leaving your current home to find one that would better enable you to age independently? So on one hand, everyone's like, well, I'm not really planning on moving. And so, however, 57% of them said, yeah, I am going to consider moving if it makes my life better. If it costs less to maintain, if it's a little bit smaller, and I'm physically easier for me to be able to handle this property. And so the thing is that a lot of folks are looking at the boomer population, the boomer generation, and saying they're not doing anything yet. And that's true, but you have to understand that the boomer population spans a 20-year span, right? So even though we've been talking about boomers and boomer population, this is a long-term game. This is not like, oh, the boomers are all going to do something at the exact same time. This is something that's going to kind of be evolving. And we want to look at how that impacts us in the real estate space moving forward here. Because even though we do hear them, they're talking out of both sides of their mouth. On one hand, they're saying, gosh, we have no plans on moving. But you know what? If things get tough, we get a little older, we are gonna move, right? And so we are gonna start looking at that. So the other thing that came out is homeowners who are selling are influenced by rates. 90.5% of successful sellers in the fourth quarter of last year stated they were going to sell no matter what. They were ready to sell. And see, that's the thing we have to understand. A lot of times we say, well, folks aren't going to buy at 6.5. Folks are going to buy at 7. For a lot of folks, like things happen, right? We have to understand that. And do people move because of rates? No, they move because of the D's. Not when you're thinking D's, these D's, okay? So we have life event triggers, okay? Diapers, diamonds, divorce, death, diplomas, downsizing, discretionary income, the daily grind, and dumpsters. All those will cause people to move. And that's what we're seeing right now. We're not seeing where, like when rates were 3%, it was very easy. Everyone wanted to jump into that. And what we're seeing is we're actually heading back to a more normal time when people move because of life events. And regardless of where your interest rates lie, these life events are gonna happen. You're not gonna, if you're getting divorced, are you staying in the same house? Even if you got a 2.5% rate, are you staying in there? No, somebody gonna die, right? You know, like all these kind of things are going on. And so what we have to understand is this is something that we need to be focusing on more so than rates. It's not just about rates. Yes, rates are important. I'm not trying to say that rates don't have any kind of impact, but we just kind of went through, we're seeing rates softening, moderating. What we don't, and what we need to be very clear about happening when it comes to rates is, we're not going back to 3s, we're not going back to 4s. That was artificially generated. It is not realistic about what we have moving forward. So look at your Ds and see, you know, what can we really focus on in these 9 Ds? Now, overall price, just basic pricing. And so you can see that Atlanta still holds in very, very steady range of 5.9% in there. See, that's a very safe place to be. And when I talk about safe, what I mean is, like, if we continue to have double-digit price growth, what happens then? We're going to form a bubble. And if you form a bubble and prices go up too fast, what's going to happen in reverse? They're going to have to go down. Now, real estate for forever moves at a very constant rate over long term. But this is what your a normal rate looks like as property values move. And so when you see people talk about, gosh, prices didn't move a lot in January. Well, you know what? Prices never move a lot in January. You know, this is the 50-year average on how much prices move by month. You know, we may see a 1% jump during the summer. We may have a month or two where it's up or down, that kind of stuff, close to flat. So normally January, February, pretty modest on the overall values. We always see the biggest increases happen during the summer because at the same time, we're based on supply versus demand. We sell more houses during spring and summer than we sell through the rest of the year. So, you know, we got to look at that. This is our 12-month shift in home prices. So home prices move up and down. However, if you look at the average since 1990, it's 4.4%. And for the last 50 years, properties have appreciated at 4.4%. And so where are we at right now? 5.1. It's a very healthy place to be. And is it good for our buyers or good for our sellers that we see properties appreciate at 5% a year? Is it bad for buyers that the property appreciates by 5% a year?
For the buyers to sell, it's good for the seller.
Well, it's good, but let me ask you this about the buyers. Would you like to buy something today and have it go down in value tomorrow? So is it very modest property value appreciation really good for our buyers too? Because if I'm a buyer, I don't want to buy a home and then think, gosh, I bet prices are going down, or I'm seeing prices going down. That's not when you buy. You buy because you want to see that positive appreciation. And even though we know properties appreciate long term, that's really good for us. So, you know, this is in Georgia MLS properties last month were up 7.5% over last year. Again, that's not counting that monthly range, but 7.5%. And FMLS, it was up 8% over last year. Now, so if you look at where we were last year, overall, the one year average was 7%. However, over the last over the last 5 years, property values here have all appreciated by over 50%, 55% here in Georgia. And so a lot of times I hear those folks are like, where'd all the $200,000 houses go? Well, $200,000 at 50% appreciation is a $300,000 house. That's where they all went. So over the last 10 years, over 100% appreciation, And over the last 30 years, 300% appreciation. And so it comes down to like, either you're going to be part of the game, you're going to be in, joining in on the property value appreciation, or you're not. You're going to miss out with it. But see, we have to understand that wealth in the United States is tied up in home ownership. And so these are our price forecasts moving forward for the rest of the year, kind of thing. Overall, somewhere in that 2.5% to 5% range. And I think we're going to be really close to 5. We're probably going to be a little bit better than the national average because we have a little bit more inventory, we have a little bit more demand. There's a lot of positive things going on in Georgia. Georgia's economy is very, very good right now. So now one thing that does worry me is the home ownership rate. And so the home ownership rate, whether you look at the different demographic classes or not, overall the home ownership rate is about 65%. 2/3 of folks own homes. That means 1/3 of folks don't. And the challenge with that is where their wealth comes from, right? And like where does wealth come from? It comes from owning real estate. It comes from property ownership. One thing that worries me though is this is a recent study where they went out and they said, for all these prospective buyer groups, why are they not buying? And so one is they're waiting for home prices to drop. The other is they're having a hard time saving for down payment. Now we are seeing rent soften, which I'm glad to see because that will help people to be able to save more for down payment. But we have roughly about 25% of prospective buyers are waiting for prices to drop. So just if you look at the data that we looked at already, are we seeing prices drop? Is there any reason for prices to drop? No, we have a very large millennial population that's all reaching first-time homebuyer age over the next 3 years. We don't have enough houses, we're not building enough houses. So just supply versus demand, prices are not going to go down. However, we have an entire group of people that are not jumping into the market because they're saying, I'm waiting for prices to drop. Well, if you keep waiting for prices to drop and it never happens, then how are they gonna enjoy that property value appreciation? How are they gonna be part of the American dream? We have to be the educators for them about what's really going on. We do have to show empathy. I feel like my heart goes out to our first-time buyers. For our move-up sellers and for our move-up buyers, that kind of stuff, those folks are coming in with great equity, which is really a very powerful place for them to be. For our first-time buyers, I know it's tough. I absolutely know that it's tough, and my heart goes out to them. So this is our average homeowner net worth. The average homeowner's net worth is $396,000. If you just took all the homeowners in the United States and divided their net worth up, it's almost $400,000. If you took all the renters and added them up and said, what's their average net worth? $10,000. So would you like to be part of the group whose average net worth is 10 grand or almost 400 grand? Which is a better place for our folks to be?
Homeowners.
Yeah, homeowners for sure, right? And this is how it breaks down by the different price categories, right? If you're making over $100,000 and you're still renting, you're missing out on massive amounts of equity by owning a home. So like it's so important that we're able to communicate this. Now, I don't mean to say that if you're only going to live in a place for a year, that kind of stuff, you should probably rent. I'm not one of these who's going to be like, no matter what, you should buy. But you're not going to see any of that appreciation until you get into that game. So this is a narrative that we need to combat. Right now, basically 25% of Americans, not just buyers and sellers, but 25% of Americans say that prices are going down over the next year. Prices are going to drop 25%. So 4 folks you go to church with, one of them thinks prices are going down. Right? All this is, and we have to be that voice of reason out here. So we have to get ahead of this narrative. I need your help. I really do. We need to be able to promoting home price stability. Good, solid growth is what we're really looking at. Talk about mortgage rates. You should talk about mortgage rates all the time. Put it out there every week. Talk to your lending partner and share what's going on with mortgage rates. Because where are they heading over the next year? Damn, right? Talk about the fact that inventory is increasing, and we are seeing that. I'll show you more in a minute. Preach, there is not a crash coming. We don't see that happening at all. And then our Georgia market is strong. Our Georgia market is very strong. We need to hang on to that. So, one thing I want to transition to is to actually protecting our buyers. And so we need to be using buyer brokerage agreements to protect our clients. Now, the reason I wanted to bring this up in a sales meeting is when I talk to new agents about using a buyer brokerage agreement, there's no problem. They're like, yeah, that makes sense. New agents are on board about using a buyer brokerage agreement. When I talk to agents, our agents that have been in the business for a while, like, I've never used a buyer brokerage agreement. I'm just not worried about it. I'll have it signed when the contract's ready. And we're missing out here. And I want to talk to you about the importance of utilizing your buyer brokerage agreement here. And I want to give you some tools. Now, first of all, don't overcomplicate it, right? Buyer brokerage agreement is simply an agreement between a buyer and a real estate agent. And it just basically spells out how we work together. We're going to come to agreement on the term, how long that's going to be, the type of agency, who we represent, what our compensation is, what our duties and responsibilities are, and then what are the buyer duties and responsibilities. That's it. It's not like some magical document, but we need to be able to put this out here for several reasons, right? We do have the whole Sitzer Burnett trial that's come about. People are wondering who's paying who and who's getting paid and what's going on. And so we need to be very clear about representation, agency, fees, those kind of things. But what, I also want to make sure that we understand that we need to have systems and tools. So what we've done is we've created some buyer presentations for you, right? And so these are our buyer presentations, and they're for Maximum One agents. And we kind of designed them to be used like all of our offices have these snazzy little blue folders. You can use any folder you want, kind of thing, or you can get the folders out of the office. And what I want is that you have a tool to be able to use to explain what's going on. And so all the branch managers are all getting all these, and where you can get them in here. And so it's basically just 12 different pages. We have a buyer's guide. It talks about the loan, the roadmap for what the whole process is, home searches, checklists, house hunting tips, basically everything that you need to sit down and show value with your client before you try and get a buyer brokerage agreement signed. We see that when folks try and get a buyer brokerage agreement signed before they've shown any value, it doesn't work. It's not a good feeling. It's not positively seen by your clients. It's not a win. It's not a win-win by any means. So what I want to do is one, to have this tool that you can sit down, go through it section by section in there. It talks about all the important aspects and things that we have to be able to go through and talk about with our clients. Now, one thing that is in here is, and that's definitely in here is there's a sheet which talks about being able to negotiate for you. I'm your agent. I want to be able to negotiate for you. I want to be able to save you money. We have to have conversations about commission. How can I negotiate for you if you're not my client? I can't negotiate in your behalf for you, for your benefit, without an agreement. That's the big kicker here, is that in the past, we have not talked about commissions when we submitted offers. And you can't talk about a commission when you submit an offer unless you have an exclusive buyer brokerage agreement. And that's the whole point. And that's what I want to do, is give you this tool, because when you look at this exclusive buyer brokerage agreement, and it talks down here about buyer agrees to pay broker, the amount set forth below, this can't be zero. It has to be an amount or a percentage kind of thing. And it said, and it even says in here, entered into the terms of agreement minus any commission paid by the broker by either the seller's broker or seller. Buyer acknowledges that neither seller nor seller's broker are obligated to pay any commission. That's a very negative statement, right? Seller, and I don't think it's a smart move, but are the sellers forced to pay? No, that's where the whole lawsuit thing came out, because over in Missouri, you had to pay a co-op commission. So it's very clear. However, we don't work for free. That's a big one. And I need to be able to negotiate on this on your behalf. I can't do that without this agreement. Right? That's the kicker. So when you go to talk about your buyer brokerage agreement, first of all, this is a no pressure game, right? This is not a hard sell. Like if you ever just meet somebody and say, if you'll sign this, I'll show you this house, that's a hard sell. That doesn't work. And it doesn't build any kind of camaraderie. It doesn't build any kind of loyalty to you. So, always we have to talk about agency and who we represent. We see time and time again that so many folks don't know who their agent represents. Do you represent the seller, the buyer, the bank? They just don't know. And then discuss the value that you bring first. And that's why we've created this buyer presentation that you can use. Now, if you have a buyer presentation, use it. No one is forced to use this. Take this one and make your own. It doesn't bother me at all. The whole idea is that I want you that when you meet with a buyer, I want you to have a tool or the tools that you need so you can sit down and show value. This is what I bring to the transaction. This is what I'm going to do for you. This is how I do real estate. Once you do that, you say these are the services I provide. These are the fees that I charge. And then everything's up front. Everything's very, very clear. It also enables you to be able to have what could be challenging conversations, right? Because are we in a place where we have to be able to talk about the possibility of zero commissions on co-op? We are, absolutely. Like for our VA buyers, can a VA buyer pay a commission? No, they can't. Can we? And so in that instance, we need to be able to negotiate with that seller. I can't negotiate with that seller if if you're not my client. Am I making sense here? Because in the past, if I negotiate for me, that's a violation of license law. If I negotiate for the benefit of the buyer, that is encouraged, right? It's who benefits by this. If you're doing it without an agreement, that benefits you. If you're doing it with an agreement, you're doing that for the benefit of your buyer. Please be very clear about this. I want to make sure everyone really does understand. So some options we have is they may say, look, only show me properties that have your commission covered, right? We have buyers that say that right now. They can also, we have some cash buyers that are ready to pay a close. They will pay your commission on there. However, we can also go in and request the seller to pay the commission before we show under F-250A. But again, if I send F-250A, but I don't have an agreement with my seller, that's a violation of license law because I'm doing it for my benefit. I'm not doing it for the benefit of my client. I know I keep repeating it, but I want it to really, really sink in. Also, depending on loan type, we might be able to roll it into the closing costs as another option. And then we can also request our seller to pay with the offer. And this one's kind of new. When we submit an offer in the past, when we submitted an offer, like commission was hands off. Well, when we include these special stipulations, so the kicker here is if you're my client, I can negotiate for your benefit. Who benefits by me getting this wrapped up in there, but by having the seller pay? Who benefits? Well, can the buyer buy a home without representation? They can, but should they? No, it's very, very risky. And our buyers need that commission to be wrapped up in the purchase price. And the only way it gets wrapped up in the purchase price is when it's part of the entire total sale. So, who pays commissions? Buyers or sellers?
Both.
Well, it can be both, but like when you go to the closing, if that buyer doesn't buy, does anybody get paid? No. So like at the end of the day, the buyer is buying. If the buyer doesn't close, no one gets paid, right? And so we have to understand that. So, but we need our clients' permission to negotiate for their benefit, in their benefit, right? So that's where this whole thing really does come down. And so the whole plan for me on this was that I wanted to give you tools to be able to use to say, gosh, when I go on this appointment, I have what I need to be able to go out, show value, show what I do, show how I do real estate. Go through the whole process, get your buyer broker signed, because it protects your clients and it protects you. And so that's the whole purpose with this here. And so like these are the two special stipulations that that I referenced in there. One's special step 619, one's 620. 619 is for a buyer requests seller to pay buyer's broker commission on a VA loan, or buyer requests seller to pay buyer's commission. Please note how these are written. Does that say agent or broker requests broker? No, it said buyer requests seller to pay buyer's broker's commission. Because who's this for? For the buyer. So be very careful in how you write these, because if you say, I want you to do that, that's a violation of license law. All right, and then F-258, that's what you'd use before you did a show. Is everybody with me? All right, so be prepared. I want you to use these folders or make folders up. You know, Megan and I back in the day, we had buyer folders and seller folders. We'd make up 7 or 8 of these at a time, and we have a couple in our car ready to go. In here, you want to have 2 copies of your exclusive buyer brokerage agreement. Why do you have 2 copies? Because you didn't bring a copy machine in the trunk of your car, did you? And so 2 copies, like everyone has to have a copy of what they sign, right? And so then we're also going to have our buyer packet, the one that we just went through. That way I have what I need to be able to go through and show value. I love to go through and like all of our offices have those marketing areas. Go in and steal all the vendor information of vendors that you trust. Have it right here ready to give to your buyers as well. Have business cards, have your lender information, be prepared. When you show up, thing is, I want you to understand is that when you show up prepared for the game like this, you're in a very strong position. No one is going to say, are you new? Have you not been doing this for very long? Like you came to play. And this is a great way for us to kind of look at moving forward on here. Also, make sure you do your market research before you meet your clients, have any kind of basic information, pricing, anything about them that you already know, schools, that kind of stuff. And then if you want yours, the branch manager is going to have these. We're going to be doing lunch and learns going over and trying to help assist. We're going to be doing role playing and lunch and learns with everybody to help grow this. You'll be able to find them at Paperless Pipeline if you want to print them off. And you can also hit the Wildfire Team lenders and they'll print them for you in color. Which would be nice if you'd like to have those too. So again, I just wanted you to have some real life tools that you could use. Yes, we're doing a seller one too, but we're starting with a buyer brokerage one, okay? So just before we get there, it's coming. But right now, we worked with the Wildfire Team and with Cross Country Mortgage to help put this whole thing together. And so we are working on the seller one as well right now. But this is our buyers one, and we felt it was so important to really jump out there because of what's happened with their Sister Burnett trial. And now there's so many copycat lawsuits out there. Everybody just wants to sue everybody else. And if you're a realtor, they just want to sue you guys. But no one's suing you. They're all suing brokers. And just so everyone is clear about that, the reason that they're not suing you is largely because of GAR forms. Even if you don't join your local board, please make sure that you're utilizing GAR forms. They are very, very powerful. All right. So let's look at what's happening with listings. So listings right now, this is new listings that's going. This is from Realtor.com's data, but you can kind of see new listings are increasing, but where are we at on total inventory on new listings coming out of the market? We're still really, really tight. It's not looking super great for us. It is moving in the right direction, but it's not great. Now, here, that's overall nationally. Here in Georgia, though, in Georgia MLS, we're up 12.5% in new listings. In FMLS, we're up 7%. So we're bucking the national trend here. What I showed you before, that was national numbers. Here in Georgia, we're seeing inventory increase. And so increasing inventory lowering interest rates, is this getting to be a better place for our buyers?
Yes.
Yeah, it really is. Again, this is where our total US housing inventory for sale is. That previously we were just looking at new inventory. Now this is our total inventory. And you can see we're not the lowest that we've ever been, kind of thing. Actually, we're better than we've been for the last several years, but we're still pretty low comparatively, right? We're nowhere near where we want to be. And so here in Georgia itself, total active listings are up 5% in Georgia MLS. They're down 4% FMLS. So, but this is a number that we've seen steadily moving up, especially over the last 3 or 4 months. We are seeing more inventory come into our market, but it's coming in a very healthy way for us. We don't have big spikes of inventory coming up. We don't have people doing mass sell-offs. There's none of that. Right? So, total days on market right now in Georgia MLS, it's 61 days. Last year it was 60. Sound terrible? Nope. Now in FMLS, it's down 44 days, which is down in there. So we can still see that we are still very, very healthy on there. Overall market absorption, what this basically is how many months of inventory do you have? And so in Georgia MLS, we're currently sitting on about 3.5 months of inventory. In FMLS, we're sitting on about 2.5 months of inventory. Now, how much inventory do we need? How many months of inventory do we need to have a balanced market? 6. So we're about halfway there. And we've been about halfway there the last couple of years. So again, when inventory is this tight, that in and of itself is a reason why we're not looking at prices dropping down. And we are seeing it increase, which I'm very appreciative of, because we need that. Some of our buyers have not been buying not because of interest rates, they've not been buying because they couldn't find the house they want. So inventory is a big, big deal for us there. Now, the other thing that's happening is permit growth is not keeping up with population growth. And so this is just for the state of Georgia. And so what you see is all the permits that we've been doing versus what's happening with population. So I showed you where this is what's happening with population. Georgia's looking really good. We're not building enough homes though. And another reason why we're looking at pricing being as steady as it's being, because yeah, we are seeing new construction increase, but not enough. So the good news is it's picking up. Bad news is it's not coming nearly as fast. So I am glad to see the new construction, and we do need more new construction, but it's not there yet. Now, what is good news for us, because we have tight inventory, because the builders are aggressively building more. Normally, new construction makes up between 10 and 15% of our market. However, with inventory levels where they're at right now, new construction makes up almost 1/3 of our inventory. And that's a very important thing for us to know about. Now, one thing that we do have to be very conscious of is of that third part of new inventory there, one challenge we have is the builders are not listing it in the MLS very much. They're only listing in the MLS after it gets sheetrock. And even then, sometimes they may only list 1 or 2 of them. So if you want to work in new construction, and you should want to work in new construction, you can't just go into the MLS and be like, oh, well, there's not much there. You've got to grab by the neighborhood. You got to know your markets. Go in and see what kind of standing inventory is coming up. What kind of what do they have coming up as well? What are the bargains, the deals, that kind of stuff. You're always going to do much better on standing inventory in a new construction neighborhood kind of thing. So this is a very powerful place to be because it's where a lot of inventory is. But you can't access it the same way as like we normally would, right? So you have to be a lot more creative. We're seeing more listings, more new construction things listed on Zillow and Realtor.com than we do in the MLS, because the builders can list it out there for free. And the builders, they're no dummies. I put it out there, more people come, they want that. So now the other interesting thing that's happening, and so D.R. Horton right now, they are offering really good deals on interest rates. They are buying down rates for the term of the loan out there. And we kept saying, well, there was a lot of concern that they were going to stop doing this. And so they just recently announced that, you know, we don't care where rates are going, we're going to keep buying them down. And so for those folks so when you have a seller or a buyer, anybody who says, you know, I'm gonna buy when rates hit 4, I'm gonna buy when rates hit 5, I'm gonna sell when rates hit 5. A lot of these builders, what can you do? You can buy at 5. I mean, you can work out different deals with the builders. So be very open-minded about that, because yeah, they may not be able to go out and get a resale with that, but right now, D.R. Horton is hot and heavy on driving things with rates right now. So take advantage of that for your clients when it comes to that. Now, what's happening with disclosure? I mean, with distressed properties, foreclosures. See, we hear this all the time, you know, especially at the brokerage. I know you guys get hammered with it when everyone starts calling and they say, hey, can I get a list of foreclosures? I hear the market's dropping, I hear the market's crashing, you know, and really what it is, if you look over here on this side, like if you were to take this little bitty data point right here, and you were to swell that up and only look at that, you might think, man, this thing's really increasing. But when you zoom out and look at it long term, foreclosures are at some of the lowest point it's ever been. And largely because, I mean, do you guys know anybody that's upside down in their home? Like, I don't know a soul that's upside down in their home. And so if bad things happen to them, what do they need to do? Sell. They got equity. So why would foreclosures go through the roof? So that's the bottom line there. Like, this is on the HUD Home Store, and for the state of Georgia, there are 9 homes for the entire state on HUD. And all HUD Home is that FHA mortgages that got foreclosed on. We will always have some of those folks that just shove their head in the sand for that, but that's not really what we're talking about here. So the other thing I want to talk to you about really quickly here is, you know, we spent a lot of time already talking about interest rates and what's really going on. What else can we do for our clients? And so one thing I want you to look at is there's a lot of products out there that we need to be knowledgeable about. And so we've asked our in-house lenders to do a lot more in explaining about mortgage rates, what's going on, what's happening in the market, as well as basic understanding of the different mortgage products out there. Now, the reason I'm bringing this up is I don't want you to be a lender. I don't need you to be able to go out and say, this is the type of loan that you should get. However, when our clients have questions about financials, about mortgages, who do they ask? Us. They ask us. And so instead, and I believe in staying in your lane, but we also have to have enough information to educate them somewhat, to keep them in the know. We need to understand the differences out here, kind of thing. And so like you know, the different credit scores we have. Yes, FHA, it has a 500 minimum, but not really, because you can get an FHA mortgage with a 500 credit score, but you have to put 10% down. And if you're getting an FHA, you probably don't have 10% to put down. I'm just being honest, right? VA says 500, and that's true, but none of the banks actually will lend out on that. That's just VA's rule, kind of thing. So, you know, your major products out here that you're really looking at, but really what it comes down to is like how about no down payment? So when you have a client who's like, I just don't have much money for down payment. Well, are you a veteran? Because we might be able to go down the VA route. That might be a really good choice. Or, you know, like are you interested in living maybe on the outskirts a little bit more? You know, would a USDA loan be a better product for them? And again, not that I want you to go out and write a VA loan for them, but it helps you to guide and advise them. You know, for our folks that have less down payment, FHA. You know, FHAs are growing even more so in popularity right now, largely because because the mortgage insurance premium, they cut it last year, which is saving a lot of folks a lot of money. A lot of our conventional loans we can get for 3 and 3.5% down now as well. And then we have a lot of national DPA programs. You know, so Cross Country Mortgage has several in there. The Chenoa Fund is another one that you can do. Not as big a fan because when it comes to down payment deals, you have grants, and then some you have loans you have to pay back. And Chenoa has switched over where you got to pay it back now. So National has a 4%. Freddie Mac has two different loans down there. It's it's $4,000 up front kind of thing. Now here local, we have Georgia Dream, both the standard program as well as the Penn. Penn is for teachers, educators, firemen, policemen, that kind of stuff. And so while those can really help out, it's 5% or $10,000 for the basic program, or 6% and $12,000 for that program. The negative here is the funding fee has to be paid on the front side of that, and they have to pay the entire amount back afterwards as well. So you may only get $8,000, and you got to still pay back $10,000 at the end. And that's one thing a lot of people don't realize out there. Now, in-town mortgage assistance, IMAP, if you have clients looking in downtown Atlanta, that kind of stuff, or Vine City has another one with up to $20,000 in down payment assistance. Clayton County has a great down payment assistance program. Cobb and Gwinnett also have down payment programs. So the whole idea here is that, again, I don't want you to know all the details about every down payment program. But if you have someone looking to buy in Cobb, if you have someone looking in this area, or if you have clients that don't have as much down payment, or have these, like, you have options to be able to talk to them about and educate them. But one thing I want to make really clear, especially about the down payment programs, is they have strings attached, right? That's the thing. A lot of times people think, it's just free money. Nothing is free, right? Okay. And so there are plenty of strings attached when it comes to dealing with down payment. And so again, I'm not trying to make you an expert in down payment, but these are some of the things that you have to be very conscious of with down payment. First of all, the amount of the down payment grant, or the down payment amount could really vary. Is it a grant or is it a loan? Because grants really are free money. Oh, look who shows up. But grants are no, get your tail up here. So but grants are loans. And so for our part, what do we want?
We want a grant.
We want a grant, right? Because then you don't have to pay it back. Now, there may be certain instances where the loan is better for you, but again, that's something that we're always going to advise them to kind of do that. You're always going to have some sort of income limits on how much you can make. If you make too much, they don't count, right?
Right.
All right. Now, well, you're just going to correct me if I say something wrong?
Well, no, well, yeah.
Okay.
But that, as far as income limits, it's household income limits for 95% of these programs.
Yep.
So that means if Johnny babysits, Sally babysits, and there's a way to prove that, and it's on the 4506 because they'll pull them, then you have to, it counts.
Yeah. Some of them, not all, but some will have geographic restrictions. So things like the Vine City, you have to buy in Vine City, that kind of stuff. Some are very much restricted geographically. First time home buyer restrictions, some are, and a lot of them are going to require that you're either a first time buyer or you haven't owned a home in 3 years.
Right.
Not all, but some. Some will require home buyer education. Again, not all, some. Some will say this is how much you can buy for. And they'll say you can buy somewhere in this range kind of thing. Almost all of them will require them to live there. None of these are investor programs. There's not a DPA for investors. So they're going to have to occupy the residence. They will restrict which type of property. Sometimes you can get on mobile homes and trailers. Some won't do condos. It just kind of depends. Minimum credit scores on all of these. You can't have crappy credit. Hey, you know what that program is for those folks with crappy credit?
No problem.
Because it's not there, okay? Like pay your bills, right? That's the bottom line. There isn't a program like that out there. And on all of these, they vary between 620, 640, and 680. Several of them have 680 as the minimum credit score. And I think that's great, right? You've got to show that you can, so that you're going to pay your bills. So income minimums and maximums. DTI is another one that a lot of people miss out on. One thing that a lot of folks don't understand is your debt to income ratio kicks more people out of the ability to get a mortgage than their credit score. more people can't buy because of DTI than can't buy because of their credit score. Now, can you explain DTI just really quickly?
Yeah, you've got a front end, you've got a back end, your housing is on the front end, so it can't be over, the general back, rule of thumb is 31 on the front end. And
1%.
right, and then 46 or 43 on the back end. And that is gonna be your debt that we pull the credit report and divide it into your income. And it can't be over 43. Now, there are times it can be. I mean, with FHA, it can go to 56.999 if I've got a DU approved eligible. So there's exceptions to the rule, but that's the general rule is 3143.
Yeah.
And for these DPAs, that's gonna be your general rule, except for one, and it's the Essex 30-year, 100%, and it'll let you go to 50.
No, but most of these DPA programs don't work with FHA. Most of them are conventional, correct?
No, there's a lot of there, yeah, a lot of
it's
FHA.
like- Totally unapplied to you, all right.
No, it's either one.
Okay. All right, some will say how much cash you can bring, like you can't bring too much cash to the deal, because if you bring too much cash, they're gonna say, obviously you didn't need it anyway, right? And then they're all gonna have some sort of a max purchase price amount in.
Mhm.
So again, having somebody like Sharon is gonna be the benefit for you, because I don't want you that you're trying to say, no, you should go after this down payment program, or no, you should go after this, or you need to go get a VA loan, or you need to go do this. No. It's when they ask you questions, you have you have enough knowledge to guide and advise them, but you also have to be ready to step back and say, you need to talk to Sharon. You need to let me get you with my preferred lender. That kind of thing, because that's that relationship, and they're the ones I don't do taxes because I can't keep up with all the details and all those things. And by the way, I'm married to an accountant and I don't do taxes. We don't do taxes, right? That Sharon knows all these things. Obviously, I've already misspoken several times, and so I just want you to have enough information to be able to guide your clients and kind of move them forward.
And if you need to talk before, even if you're gonna go see a customer and you need to talk and they're gonna need down payment assistance, if you need me, call me and we'll go over some things based on their situation. Because it's gonna be based on the individual situation as to what program they can use.
Yep. All right, and then congratulations to our top producers, kind of thing. And we're gonna kind of let the branch managers in each location kind of do it, and then we're gonna go local now. So at this point, we're gonna turn off the mics, and now we're all gonna kind of work together in our own individual spaces. So love y'all, I appreciate y'all. Bye.
Thank you.
All right.